Hello, good afternoon, everybody. So I hope you have today's webinar is going to be a very good one. So for the very first time, I think this is the second time to talk about indicators. We're going to find the best indicators that someone can use for long-term trading. So the first thing, the word indicators actually comes from the word indicate. It comes from the word indicate, which showing where something is headed or showing where something is from. So in the forex market, there are two sets of indicators. We have the standard indicators; those are the ones which come already installed with MT4, and then there are the custom indicators which anyone could develop. So depending on whichever you're using, there are some which come directly with MT4. If you go here, you'll be able to find them. They are here under the insert option. We have indicators, and then sorry, just a second. Just make my screen so that you're able to see that. So we have, this is the first set of indicators. They're the standard indicators. They come already installed on the MT4. Whichever MT4 you're using or MT5, you should be able to find all this. And the list you're seeing from this point, this one, this one, this one, and this one, these are the set of the recent indicators which you just added to your screen. So on my side, these are the ones which I've used recently. Then the real indicators now are here. If you want to know the trend, have average directional movement index, have Bollinger Bands, have envelopes, we have this Ichimoku, have moving averages, have parabolic SAR, then we have standard deviation. So if you add any of this basically with the word trend stands for those that show the trend, which means if you're using any of this one, you should be able to find the trend correctly. Then we have the oscillators. So oscillators basically show overbought and oversold. If, for example, let's add this one, stochastic, you'll see that we have overbought. The level above 80 stands for overbought. The level below 20 stands for oversold. Add the next one. All these indicators, all of them stands for overbought. They show you exactly when the price is overbought, the price is oversold. If you add pause, you'll be able to find like this one. Now you have to add a level individually. You have to give it levels. To do that, and then go to levels, then you can now add the overbought and the oversold levels. So the indicators which I've looked at so far, the ones which are here under trend, oscillators, volume, and Bill Williams, this one are standard indicators. They come by default with MT4. If you install your MT4, you'll already be finding them here. You'll already find that they exist. But the one you used recently is the one that appears under the first list. So there's some thin line here. I hope you can see it. So there's a very thin line here, which separates the ones that you currently use and the main indicators themselves. So these are the standard ones. You can add any of them on your screen to be able to see exactly how it looks. You cannot look at all of them individually because they're many, but we look at some under the trend because we want to look at indicators which someone can use to hold on to trade for a long time. So the next set is this one. They're the custom indicators. What custom stands for are actually those indicators which come by default with default. I mean, no, those are the ones which are created by the programs. So if today you make an indicator, you create a list, like these are all the set of indicators which I've used so far. So majority of them also are installed by default with MT4, but then most of them, as you can see, I've actually added them myself. These are myself, these are myself, these are myself. This can be found anywhere. If you find anyone who has an indicator which they are using and you think you should use it, then you will be able to find it under this list here. After installing it, you should be able to find it under this list. So there are several. This one, there's no limit to the number of indicators you can have on your screen. there's no limit to the number of custom indicators you can have attached on it. You can have as many as you want. But the thing is, there's no point of having many. If you don't use them, they'll slow down your computer. So you only install those that appear to work well for you. So back, we're supposed to look at today, back to our main topic, which is the best indicators, long-term trading. So before I move on to that, there's one thing which I have to make clear, that there are like 4 types of traders. We have 4 types of traders. We have scalpers, and then long-term traders. We have we have scalpers, then we have day traders, and then we have position traders, and there are other types of traders. So the scalper is that person who enters trades and then they exit almost immediately. When they enter trade, they don't remain in that trade for a long time. Like you enter for some minutes and then you get out with profit. So a scalper would enter somewhere like this. He enters again when the price moves slightly his ways, gets out. The price again moves, he gets out. So it's like it's maximizing on every small move. When the price moves his way just slightly, he takes the profit and then leaves that trade. That's a scalper. And then we have day traders. Day traders are those that the trade can run for a day, some very many hours, or even a day. So if you're that person that when you enter trade, maybe you're looking at 1 hour, sometimes you'd enter maybe a sell here, then this trades overlaps up to the next day, that the price continues your way up to maybe this point, then you exit around this level here. So you've basically taken this move from this point to this point, then you're known as a day trader. So get this clearly, those that are trading day traders are different from those that are scalping. If you are scalping, you'd enter here and then exit just at the opening maybe of the next candle, or you'd enter and then you exit maybe like 2 pips, you're out, 3 pips, you're out, 4 pips, 10 pips, you're out. So that's a scalper. But then a position trader could hold onto a trade up to like 138 pips, 140 pips. This is a day trader. Then we have the last type of traders, which are known as the position traders. So if you're a position trader, if you are holding trades maybe that goes for a month, then you can safely be defined as a position trader. That means you are holding trades for a very long time. So the webinar which you're looking at today is basically those that are holding trades for more than 1 day. If you always have trades that run for more than 1 day, then we're going to look at the indicators which you can use to help you actually trade or hold on to trades for a long time. So other than price action, there's a difference. Price action is where you look at whatever is happening on the screen, then you make your judgments based on whatever is happening. And also use indicators to do the same thing. The indicators can do the same thing for you, like they can show you whatever you expect to be happening. So by looking at a chart physically, you can be able to see exactly where the price is headed. Like in this chart, you can see we were upwards, and then there's this big massive retracement. There's an uptrend, and then there's a massive retracement. So we start off, let's start with the first indicator, the very first indicator which you find yourself using as a position trader. The very first one is this one. You go to trend, go to set, indicators, trends, and then we have the moving average. This is the most, that's not moving average, that is man index. We have this one, moving average. So there are certain parameters here which you have to understand exactly how they're working. Moving average is basically the average of either the closing price, the opening price, the high, and the low of a particular pair within a given duration of time. So if you have period as 50, what period stands for is basically the number of candles back. We find the average of the past 50 candles. This is what it stands for. So by default, this is always 14, which means we use the method moving average method with simple, and then we apply to close, which means we are finding the close for the past 14 candles, finding the average close for the past 14 candles. If you increase this to 52, it means you are finding the average closing price for the past 52 candles using the simple method. The other methods, we have exponential, we have smooth, then we have linear weighted. So personally, I use only these two. You could do research on these three, the remaining 1, 2, and then find exactly which one's best for you. But then personally, I use this, and then I use the exponential method. So that's simply what period stands for. Whichever indicator you're using, almost all of them have that period. There's that parameter where you can choose the period. This one has none, it doesn't have the period. And then we have the next one, which is Bollinger Bands. It has no period just yet. This one has no period. And then we'll look at the other one. Envelopes, we have period. And then we have the apply to which price, by closing price, opening price, or median price. And then we also have this. So that's basically what period stands for. If you're using a moving average, this period stands for the average for the past X number of candles. So the first indicator which you're supposed to be using as a long-term trader is moving average. And for a long-term trading, either this should be 50, you have placed it, or you could place 200. These are the best for long-term trading. If you are using these two, these are the best for long-term trading. The 200, and you have 52 moving average, simple moving average. So how it works is this. We monitor when the price crosses, when the 50 moving average crosses above the 200 moving average. The 50 moving average can also be known as the fast moving average. When the fast moving average goes above the slow moving average, that's a good sign for a buy. It means we are heading to the upper side. And when the slow moving average, when the fast moving average goes below this slow moving average, that's a sign that you're supposed to look for a sell. Also have this, which is a very good sign. So the reason the period is, I've added period to 50 and I'm using 200 is because I want to find the average for the longest possible time, and that is 250. They are the best combination so far. That too, somebody is in place of 50, they could use 80. This is still correct. So whichever they're using, 50 or 80 or 100, the result should almost be just the same, but then it gives more print. So how you get this, how I came up with the numbers which I've mentioned, these numbers here, how I came up with them, that you actually have to learn how to use the strategy tester. Strategy tester gives you like the ability to choose the period such that you'll be able to look at an array of periods, and the one which works best is the one you use. So that's how I've come up with this one, with the period here 200, and then I've also come up with the same way this one, which is 50. That is how I came up with those periods. So you don't just guess the periods just because you are using the chart, you are using an indicator. Not just guess the period for that indicator, you have to back test it. You have to use the strategy tester to get the period. So I'm not going to look at that today. How you back test, how you use the strategies, I'm not going to do that today. But then just know that that is how I came up with this period. So this is the first indicator. This is the moving average is the very first best indicator that you could use as a trader. The next indicator, the ADX, average directional X. Sorry, average directional and index. This one. So sorry, there's a mistake here. Second. There's a mistake. When you go to this using insert, then you go to indicators and then you select the ADX, it actually brings something else. So it's better You scroll down to trend, then you look at that. And if the result is the same, you can use this option. This one, the plus, the green plus sign actually also stands for indicators. So you go to indicators, then you average directional movement index, which is this one. So it has period, it has some period, which is 14. Then you also apply the close. Then this is the style of that line. This is how the line should appear. So there basically it has three handles. We have this one, the first one, which is D plus. Then you have the next one, which is D minus. Then we also have this as a handle, but it's not under the colors. So what D plus stands for is actually when there's an uptrend. D plus stands for an uptrend. D minus stands for a downtrend. Then there's the style. This is also a buffer. It's also like a handle in that indicator. If we add it to it, you'll be able to see it. It is this one here. So this was a handle here. And what it means is that it shows you when there's an active trend. And as I've mentioned, if you are a long-term trader, you don't use the period to be 14. Instead, use 52. Like that. So basically, you can say from this indicator, you can see that from this point here, this point had a green. This green means this is an we are in an active. Then we also have the red one. So anytime you have the green line, which is this one, above the red line, it means there's a trend. But it does not show whether the trend is active or not. But then when you have the complete line, which is this one now, let me put it dotted, above 25, it means we have an active uptrend. So anytime you have this combination, the green line is above the red line and then the dotted line is above 25, that means we are in an active uptrend. But when you have this, the green line above the red line, but then the dotted line is below 25, it means we are in an uptrend, but then there is no strength to that uptrend. That's simply what it means. So when you're looking at something like this, you're supposed to be looking for buy positions. As a long-term trader, you don't exit any trade. If you bought anywhere, don't exit until when either the dotted line descends below 25 or the red line gets above the green one. That means we're in an uptrend. So if you took a buy somewhere here, you actually are supposed to hold on to that trade. You're supposed to keep holding on to that trade until when the price reaches your target. So this one basically, if you have to combine these two indicators, we have to combine the moving averages with this one indicator on our screen. You're supposed to have bought here, this one, which means although you're an active trader, or maybe you're a long-term trader, you only had the best chance to buy it when this happened. After this has crossed, after the slow moving average has gone above the fast moving average, after the fast moving average, have gone above slow moving average, and then the dotted line have gone above 25, and the green line is above the red line. So after that, that is when you had the chance to pick a buy position. So as it is, after that, now this is now a good trade for you. If you want to trade successfully, wait for certain conditions to be met before you can pick that trade. Like after this trade here, we still had the chance to trade it here. So we have a sell, the seller started appearing here, but then the actual place, there was no actual place because the dotted line remained below 25. So there was no actual sell place. But then you can see that we had a very good downtrend. So if you are selling across, that is when the moving average, the slow moving average goes above the fast moving average goes above the slow one, then you could have taken a sell there, could have sold it here, and then you could have remained in that trade up to when there was a cross on the other indicator, which was this one. So you could have remained short up to this level here. You could have sold it there, then you could have remained short up to when this happened. So after that, you still had the chance to sell it. When the cross happened here, again, like this. So basically, these are just moving average. The lines which you're seeing here, they're just moving averages. Especially the one which is here is a moving average itself. So when this, the upper moving average showing you a sell, but this does not show the same thing, and the other two lines, which is this and this, are supporting the up one, you can still trade it. So as a long-term trader, you remain short until when something opposite happens. So you technically could have taken a sell, could have remained on that sell up to there, could have taken again another sell up to maybe this point here, and then you could have taken another sell when there was this cross. Yeah, it's a sell, and then you could have remained on up to this point. So after that, there's some short-term buys which you could not have bought because the indicators you're having on the main screen are actually a sell. So you combine these two and then the next one to get a good direction. If one of them is showing you something completely opposite, don't trade it. You must learn how to find indicators correctly. Is that correct? So when you're having when you have a downtrend like the one you're seeing here, you have a very good downtrend like this. Ensure that whatever you're trading, that has to be supported by the two indicators, this one and the next one. If you have a sell based on the two moving averages, but then the indicator on the lower side is not supporting the same position, you don't do anything. The two must be supported. They must be showing the same thing. That is why when the price was here, this was a buy from this point up to, it continued maybe up to this point. But then I didn't say a buy. I didn't buy it there. Instead, you wait for and buy when the price shows you this level here, where these two and the other one are showing you the same thing. That's when you pick a trade. Otherwise, you don't do anything. So far, in my opinion, these are the best indicators which I can recommend for anyone. They are my favorite. They're the best indicators. If you want to trade successfully the longest possible time, then I recommend that you remain with these indicators. Remain with the moving average, remain with the ADX. You can also look at the others, like you can retrieve this one also. You can look at Bollinger Bands or the envelopes. Envelopes are basically moving averages put together. This is how the envelope looks. It's just two moving averages placed together. That's how it looks, and it shows you almost the same thing as the moving average you're having, this one. So thank you very much. That should be the end of this webinar. I'm not saying that's the end of indicators. You can still use any indicator you want to use here. You go to insert and then indicators. You can try using all these ones. You can use all this and see how they work. You can also use all these oscillators, see how they work. You can also use this one. You can also use this one. Or if you have any indicator downloaded from online, you can still find it here. Try using it and then tell me what you think about indicators. So far, in my opinion, I only recommend these two. I only recommend the moving averages, which we've added this combination. So recommend the one on the lower side of the screen, which is this one, the ADX, average directional movement index. So thank you very much. That should be the end of today's webinar. We meet again at the same time. See you.